All right, hi everyone. Welcome back to our weekly trading forecast for the week of 17th of August to 21st August. So my name is Dylan, and over here I have JJ with me. So welcome back. And first off, we are going to start off with the dollar index. So let me just share my screen right now. All right, so this is the dollar index in the day charts. So we can see that last week the dollar index was trading within the range, and it is still trading within the range right now. But it actually went up a little bit further, tested the top of the range somewhere at 93.9, close to 94. It started to get resisted and reverse, and then it started to fall, and it closed somewhat more bearish, in my opinion. So this entire range right now is about 2 weeks so far, and previously the previous range after the entire bearish movement right here is also about 2 to 3 weeks time. So maybe in this week, dollar could continue to fall and even break out of the entire range and start to break new low again, or it may try to pull back a little bit further towards the top of the range. So I mean, these are different scenarios. You can look at it, but as of now, what I think is more likely going to be the scenario is that because the dollar index, the price actually closed below the mid-range of the entire range. So there's a possibility it may continue to fall further. So in the beginning of the week, we just have to see if, let's say, the price starts to push back again, but however, it is not able to close very precisely above the mid of the range right here, then which is about 93.3. Then there's a possibility that that we can actually look at the smaller time frame, such as the 1 hour charts, and try to sell somewhere at the top of this small range right here. So that's one scenario. However, if it were to go up even higher, then this entire movement could form a pattern, such as the bearish bets. So as it pulls back even further, if it closes above the mid-range, then you can just wait for it to reach somewhere at 93.8. Between 93.8 to 94, I think that's where we can try to sell the dollar again at the top of the entire range. But however, if the price continues to fall even further without pulling back, definitely, since it's still ranging, you can still try to buy the low. But however, if you are not a fan of trading against the bigger trend, then you might want to just wait for it to break lower out of the range and wait for the pullback before trying to sell the dollar again. All right, so that's for dollar. And for the euro dollar, pretty much the same scenario as we can see in the day charts. Euro dollar continues to fall a little bit further and reach the bottom of the entire range right here at 1.71. It found support and rebounded off, had a and started to climb for the past 3 consecutive days. In fact, in the weekly charts, this is already the 8th bullish candle, in the weekly charts, and it's still trading within a rising channel. So just like the dollar index, the euro dollar also break above the mid of the entire range right here and close above as well on the very last day. So it's still potentially more bullish. So the same thing could happen if it pulls back a little bit and found support at the mid of the range at 1.18 and doesn't close below. We can try to buy the yen, towards the top of the range, and it's just the same scenario. But I hope hopefully this is the scenario that will appear, because I'm more biased towards buying the euro dollar. Of course, selling the dollar mainly. So and of course, if it were to break even lower, the same thing will happen in the 1 hourly charts. A bullish bet may form in this case. But like I always say, don't try to jump to the conclusion that this will be forming until the price breaks below the point B. Okay, until it breaks below, then you can start to wait for the final formation, the point D of the entire bullish bets. Otherwise, this is still non-existent. It's just that this is what I can foresee if that really happens. So that's for euro dollar. And with that, I want to pass my time over to JJ to share his forecast for the week.
Yes, well, we have dollar yen. So like what we talked about in the week, we have seen a support here, and on a larger time frame, we can see that this was an obvious area of interest. So after finding support here, we can see two very similar retracement waves back into this supply zone. And as predicted, price has been resisted. So this week we could continue, we could look to continue selling dollar yen. Looking at the smaller time frame, hourly or 4 hourly, we could await maybe like a small pullback into this supply zone. If price does give us the opportunity, then I think that this will be a very good price to sell dollar yen again. So somewhere between, I would say, this price level, so about 106.6 to 106.8. Next we have dollar CAD. So dollar CAD also still the same falling trend line. It's still being resisted, and the chart this week, yep, at the start of the week, it got resisted again at this trend line. But we should be careful that in this at the current price, right? We can see previously that this was where price broke out of this, was a Jan to about a 1 year downward channel, and this was the initial break. We can see that there was a break here, retest, and that was when price started to shoot all the way up. So now on the at this exact same level. So to continue selling dollar CAD, we should be careful. But on the 4 hourly time frame, it is still a downward channel. So similarly to the dollar index, we can still consider selling the dollar CAD when price somewhere at 1.3315. This would be an area where we could look to sell dollar CAD again. But if price breaks above this level, which means it will break above the trend line, then we would have to wait for a higher price to sell the dollar CAD. So this will be my 2 analysis.
All right, thanks JJ for sharing. So yeah, I think dollar CAD is something you want to be kind of careful about it because it is definitely kind of I think one thing is that we might need to understand more about the oil prices right now, because I think oil is still kind of climbing, so that kind of supports the Canadian dollar while the dollar is weakening. So there could be a possibility dollar CAD may continue to inch and dip lower in this case. So I think continue to sell the dollar CAD is still fine at the current moments, but just try to take profit whenever in a short term wise a wave of a bearish trend has been completed. Try not to hold the trade for too long. That's the only thing I can think of. All right, so
and hold and
yes.
to add on one thing, if I'm not wrong, there is an was it this week? Yeah, there's actually an OPEC meeting this week. So I think we will also have to take note of this meeting and see the outcome. So yeah,
all right. All right, thanks JJ for sharing. Now back to my screen. Next upcoming is the gold. So the gold had one of the biggest drop in a day historically. I mean, I didn't really look at the entire history, but it doesn't matter. It's already a historical drop. To be honest, it is really overbought. Ever since it broke the 9-year high, and there was very little resistance and reversal, and just kept climbing. That kind of worries me, and I more or less expected a drop like this. But honestly, of course, I didn't predict when that will happen. I thought it may go a little bit higher or what. But anyway, what happened is that the gold technically it has formed a new rising channel. So obviously it got resisted at the top of this entire channel, and finally it start to burst towards the low, got support at the bottom of the rising channel as well, and back to the previous 9-year high or the previous historical high at 1,921. Right now there's some support, some pullback, but but obviously the bullish movement is kind of a little bit sluggish, but definitely not showing any sign of a reversal yet, or any sign of a sell-off yet. But what could happen in this case, if I were to look at what happened previously, previously there was also a very big drop in the gold price, I think early March. So it didn't recover that fast. In fact, it ranged for a while. The same could happen for what's happening right now as well. So try not to just be aware that there's a possibility it may range. So what happens is if the price were to continues to, let's say, stop climbing and start to push back again, kind of a sell-off kind of period again, then we want to see if we have an opportunity to buy again at the bottom of the channel, or back somewhere at 1,900. You can see whether there's an opportunity to buy the game. Otherwise, if we're just looking at the 1 hourly chart, look at a very small time frame, definitely we have a pullback already from the bullish trend right now. So there could be a possibility it start to break higher and you can continue to buy the gold. Watch out for the price right here at the top. I think this will be a very strong supply zone for now at 2015 to about 2030, very big range. So right now volatility is very high. If you're trading gold and you have a stop loss of say over 200 pips, that's entirely normal, because on the other hand, your profit should be looking at 400 to 600 pips as well. So that doesn't really matter. All right, just remember that. So that's for the gold. Lastly, I just want to talk about the Dow Jones. Dow Jones has been, at the beginning of the week, it started to climb even further, but finally, there's a very huge sell-off right here. Not really huge, but quite a big one. Came down, and definitely that is the end of this entire bullish trend. So right now, the price is going to a range. And in the daily charts, we can see that it is actually trading at the top of a rising channel. So the upside is kind of tight right now, because if we were to look at the weekly charts, this is a very important level at 28,300. If I were to shift a little bit, but anyway, I'm looking at 28,300 as a very important level of a supply zone. So right now, what's happening is that after this drop, it went into range. There's multiple attempts to fall, but it always got supported at the bottom, and is still climbing. So it does looks to me that Dow Jones may continue to climb, but like I said, the upside is very small. So there's a possibility when it reaches 28,300, a reversal may start to happen. Of course, that is still that still needs more observation before we can confirm that. So nothing really much about Dow Jones, but in any case, if it is able to break lower, break below the range, then we want to wait for pullback and try to sell the Dow Jones again, all the way back to its to the bottom of the entire rising channel in the day charts. And just last but not least, I just want to talk about Aussie Kiwi. Mainly it's because the Kiwi dollar, if we were to look at Aussie dollar, okay, last week in the day charts is kind of ranging, started to climb a bit more, still supported at the 20 moving average. But Kiwi is very different. It actually fell. Right now it has already reached the 55 moving average, and that's mainly because last week during the cash rate or something like that. Anyway, in their monetary policy, they decided to boost their asset purchases up to 100 billion Kiwi dollar. So that's the main reason why Kiwi started to depreciate and depreciate against the Aussie. So as you can see in the for Aussie Kiwi, in the weekly charts, it is a very huge range right here, very, very huge. It has already rebounded off from the bottom, that's for sure. And it is now still moving towards the top of the range. So given this fundamental that the Kiwi is going to be weakening even further, I mean, there's a break, there's also a break of a falling trend line or even a channel. All right. So I think there's a good chance for us to keep buying Aussie against Kiwi. You can look at the 1 hourly charts using the 20 moving average as a support, as the very first support. 50-minute charts, look at the 55 moving average as a support to continue to buy Aussie Kiwi. But just make sure that you observe for retracement movement that is not too sharp. Probably two wave of pullbacks is always my best one, like such as this one. Two wave of pullback, then you try to buy again. Yeah, so that's for the Aussie Kiwi. And with that, that's all for this week analysis. So thank you so much for watching, and we will see you again this week.